Okay, we're back again. Usual hours, usual time, every day. Starting today. Welcome everyone. Good to have you here. Hopefully you're doing great this Thursday. And thanks for popping in, spending some time here on the channel. Let me get the chat in front of me here. So how are you doing? In today's live stream, we're going to do the following. We're going to analyze the charts. We're going to include the weekly time frame today as well. I shortly want to explain something on the daily, and then we look at the lower local time frame here. And we go into chatting and Q&A afterwards till the end of the stream. There is not a lot to add compared to this morning and yesterday. There's a little bit of more information that I like to talk about locally here. The move to the upside and especially this range down as well. I want to share my thoughts and the probabilities about the price action here, of the price action here. But yeah, we're going to start on the weekly, shortly cover daily, and then zoom into what's happening here locally. And some of the levels that I keep an eye on, including the ones you see on my chart at the moment. The red lines are point of controls. You can see them here. One is currently acting as resistance. And then we have a daily naked point of control below us and a daily above us. And if you want to see what I do on my chart at any given moment, I have sharing on. The link is in the description. So you can just click the link in the description. Like if you scroll down a bit, it eventually says check my chart or something like this. And you will see everything I do on my chart when that is turned on. And most of the time it is, except for when I do some more personal related stuff. But generally it is on. So yeah, FYI. Okay. Good to be back from my trip in the southern hemisphere of the world. But here we are, and getting back into the grind, the Elliott wave grind. I love puzzling. It's like playing a game for me. I always love keeping an eye on the chart, and it's only luxury for me. I'm also able to talk to you about it, and people find it interesting. So really, really cool. Okay. Okay. Jeffrey, welcome. MS, Christian, nice to have you here again. Been a while now. Seriga, what's up? Started training to run a 21.1 kilometer half marathon in the spring. Let's go. Good job, Seriga. Nice. Instead of cycling, you're going to go running. What is your average running distance? What do you usually do? With running, build it up slowly, right? I know people in my direct environment that wanted to go too far too quickly, and they got injuries afterwards. Not like very big injuries, but it's just like you overbelasten. What's that like? Your body is not used to the distance, and generally the knees and the ankles, right? Those are the two that can create a problem. But nice, man. 21.1 kilometers, go! I will do the same distance with my wife on the 3rd of November, doing a half marathon here in Nice. So looking forward to that as well. Greg, welcome from Boston. Good to have you here. Maybe it's good evening where you are. Still afternoon in my case, but there might be some people here where it's evening. Black Moss, maybe a Band-Aid. Brian, David, welcome. F Society, what's up? Holdo Crypto, Matthias from Argentina. Good to have you here. Alan, Steve, Alan, Steve. If you have no idea what I just did, just Google it. Just Google it. Mike, by the way, maybe a Band-Aid. Thanks for the sub. Nice to see that your trading is going well, no? Maybe a Band-Aid. Thanks, man. Markets Mike, make sure to fill in this form here and we will get you sorted, bump you up to silver. As the membership you got gifted is bronze, but I always bump them up to silver. Mark, welcome. Good to have you here. Doug, and maybe a Band-Aid. Thanks, man. Carl von or Ian, maybe it's Ian, Von Ian Ray Tabada. Welcome, and thank you, Adam. Watching live from the top end of Australia. Jeez, other side of the world, eh? Such a global community as well. Thanks, Adam. Welcome. Rodney, welcome from Michigan. Doxe, my African friend. How you doing? I drive 21 miles. Not hard at all. No, driving, easy peasy. Patrick, what's up? Show us your point of view on the number 1 BTC. Patrick Visser. Dutch question, but I will. Yeah, we're going to start in a second. Good afternoon, mister. How you doing? Hope it was great. Yeah, South Africa was good. We can chat about it when I go into chatting and Q&A. I can talk about more about what we have done. So, yeah, you and your wife just inspired me. I've never run before. Just start on average. The pace will be 6-7 minutes per kilometer, I think. That's already quite fast for someone that never runs. So when I started training my wife, she was not much of a runner. She likes other sports. So once I started to train her, I think her pace in the beginning was 8.5 to 8 minutes per kilometer. We started at about like 6.5, 7-ish kilometers per hour. So that is averaging like 8.5-ish, I think, minutes per kilometer. But now she's improved, and now she is already, I think she's getting now close to like 5 minutes per kilometer. So doing very well. But of course, it's the duration that you know, that it's a marathon. You know, it's not a sprint. So, MT, welcome. Had a good quarter despite all the weather bullshit. Yeah, I mean, it's insane. I also saw the comment of cheese, and so did you. So, you know, people living in America, not everyone, but you know, the eastern side had some problems with hurricanes. Yeah, crazy. Cryptoman, welcome. BRNKX, welcome as well. Dr. Me, F Society. Quite the welcome back. Good to have you here again, Mike. Good to have you here again. Okay, let's start. So, as promised, we're going to start on the weekly time frame and then go down from there. Let me first organize my chart here. Up. There we go. Very nice. So, of course, because I was abroad for the past 11 days, we actually haven't covered the weekly. Whenever I had the opportunity to do a live stream, I focused on more local stuff instead of the weekly time frame. But now that I'm back, we can do some weekly time frame analysis again. Include this, this, and this. Are we going to include the weekly bearish scenario as well? I mean, as an analyst, you always need a bullish and a bearish scenario, so we better just add it. Okay, there we go. And then we move this up, organize this one down. Okay. Sorted. And then I'll put the diagonals in as well. Okay, there we go. Okay. Very nice. Let's get started, shall we? Missed you, brother. Thanks, MS, and yeah, welcome to all of you. I love being live. That's probably why live streams generally I say, oh, I'm going to be online for 30 minutes or 1 hour, and then 2 hours later, here we still are. Now it's like flow state. You just enjoy what you do before you know, like time flies, and so much later. But no, happy to be back. Cheers, man. Okay. Let's start. How are we on time? 15 minutes and 30 seconds. So perfect. Okay, so let's cover the chart, Elliott waves, and then we get to chatting and Q&A, answering some questions and stuff before I then head off again, as I do have a very busy agenda because I just came back, and you know how it is, right? When you come back from holiday, you just got home and you gotta, like catch up on certain work-related stuff and the house and whatnot. So at least I unpacked my whole suitcase and everything already. So that's nice. Okay, 16 minutes by now. Karen K, welcome, man. Mr. X, Karen K, cheers, guys. Okay, Andrew, welcome, Andrew. Nice to have you here. And Buddha Meditation, welcome. Okay, thanks, guys. Let's start. Weekly time frame. We continue to keep an eye on this impulse to the upside. Higher probability compared to the most bullish scenario, which I'll show in a second, till the chart proves us otherwise. So here what we're looking for is a wave 1, 2, 3, 4, and a wave 5. Now the common target for your wave 4 is the yellow box, nicely respected, 57.1, 42.8, invalidation 37.7, and the target for your wave 5 is 81 to 129k, which of course is a very big target area, but based on the lower time frame structures, right, we can get a lot more precise. This is your weekly target area for a wave 5, but then your daily target area is going to be a little bit smaller, and then you have your 4 hour, and then you have your 1 hour, and then you have your 15 minute, and etc. Right? So we need to wait for more information, and then at a later stage, we can get to a much more precise estimation of the target of your wave 5. Now, by all means, a wave 5 should be an impulsive structure. We can have two impulsive structures in a wave 5. First of all, most common is a normal impulse, a 5-wave structure, right? Second would be an ending diagonal, 1, 2, 3, 4, and then a wave 5. By all means, you want price to take out the high of 3. Wave 5 not taking out the high of 3 is incredibly rare. That would be a truncation. It's just not even worth looking at it. You definitely expect price to take out the all-time high. Now, if we then look at this scenario from a channel perspective, channels are actually interesting in Elliott waves and very useful as well. This is part of the Kennedy channeling technique. You can Google that if you like to. But this is a trend channel. And this channel is taken from the end of 1 to the end of 3 to the end of 2. And what you're looking at here is mainly a wave 4, because this trend channel here, right, is following the trend. Every time you make a new high, you move this channel up till the moment you start a range that breaks the lower trend line of the channel, which we have done, as you can see. And the moment price breaks the lower trend line of the channel, the trend channel, the probabilities increase. You are looking for a wave 4. In an impulse, 1, 2, 3, 4, and then eventually still look for a wave 5. So the fact that price broke out of this range supports the narrative of a wave 4. Now, this is generally the first channel that you would put on your chart. This is a base channel. Now, this is a channel taken from the low of 1, end of 2, end of 1. What you want to see is wave 3 to break out of this channel. You can see it's also nicely respected. We moved up, hit the top of the channel, moved to the midline, perfect support, a little bit of hesitation at the upper trend line before moving above the base channel. And then we came back into the base channel. That's no problem, but you don't like to see a wave 4 hit the lower trend line of the channel here, right? So you don't want to see that hit. Currently, the lower trend line is sitting at about 48 point something K, right? 5K, 3K-ish. And you want wave 5, of course, to just move back to the upside. There's no, wave 5 doesn't have to do anything with regards to the base channel. The base channel is important because of your wave 3 and the retracement of 4. Wave 3 preferably breaks out of the base channel, most common. Wave 4 comes back towards the base channel, shouldn't hit the lower trend line. And then finally, we have an end channel, and the end channel is taken from the end of 2. I currently put it on the low here of your potential end of 4, and then the high of your 3. And commonly your wave 5 ends in the upper half of your end channel, right? So between the dotted line and the top trend line. Okay. Now that being said, another reason why it is interesting to consider the low being in of this range, and we have been talking about this a few times in the past, over the past 2 months, is first of all the monthly support resistance area. So here on the monthly time frame, we have the whole range since 2021 basically to where we are now. And you see two boxes on my chart. First is at 30K and the second one is at 50K. Now you can see here we had support, 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 failed eventually, resistance, resistance, and then eventually broke it to the upside. So quite a clear, easy support resistance area. And then again at 50K. Resistance, support, resistance, support, resistance, resistance, support, question mark, right? It's an important level on the chart in confluence with this. And this is on the weekly time frame, a volume profile taken from the 28th of December 2020 to the 9th of May 2022, basically this range here. And the volume levels are very nicely respected. As you can also see, whoops, as price move down, resistance, resistance, move up, value area high, point of control, move back up, and there you go, value area high retested. Right, very important area of support around that 50K. If you fall back below the value area, so below this low here, which also means you're going to fall below the monthly support resistance area, then for the bulls, the only safe and grace is that you move back up very quickly, because the moment you retest this and then change the structure, probabilities increase to take out the point of control here, which basically means you're invalidating the impulse that I just showed, which is currently the higher probability bullish scenario on the weekly time frame. Your most bullish scenario, however, is what you see on the chart now. Now, this is your bullish alternative, right? As long as the other scenario stands, which is this one here, this one has a higher probability. And then secondly, you have the most bullish scenario, which is a double 1, 2, 1, 2, 1, 2. And instead of a 5, you still have to start a wave 3. Now, wave 3s can be, very long, very extended as well. So very high price action. And then you look for 4, 5, 4, 5 to end your bigger impulse. So this one is a lot more bullish. However, from a trading, so this is where you have a difference between analysis and trading as well, that even though you maybe as an analyst have this as your primary, right? That's absolutely possible. There's no reason to think it cannot be. It's just that probability-wise, if you really follow Elliott waves, this makes a lot more sense, especially due to the size of the range here. But for now, this is the strong alternative. And in this case, you look for wave 3 up. So definitely it's a great scenario. Also a high probability scenario, but it's just below the normal impulse, because it's better to be conservative than thinking about, I just put my take profit of my spot long position or long whatever at 400K or 300K. And if it doesn't hit 300, I'm not selling. Okay, that's nice. That's nice. But then you might get the same as what many people had over here. Price moved up, right? You have XYZ talking about, we're going to go to 200K and 300K and 500K. Mind you, those targets were already mentioned in 2020 and 2021, right? Same story, same targets. What happened? 65K touched, 30K. 69K touched, 15K. If you are not prepared for conservative scenarios, and in 2021 and 2021 and 2020, you had targets in mind of 150, 200, 300, 500K, you really got your ass kicked twice, right? In my opinion, it is much better to be conservative first, and if price shows us the strength, we look for higher, and this becomes the new priority. This becomes the new primary. But the difference is that in a wave 5, we are going to be looking here for, of course, maybe like 1, 2, 1, 2, 3, 4, 5, 4, 5, and then start a bigger range, get a bigger rejection, and a bigger range, right? It should take some nice and good amount of time. We want to see a big rejection as well. If we look for a wave 3, in the most bullish scenario, we want to see impulsive continuation, volume increase, right? So we want to see volume increasing as price move up higher than the previous impulses. And we only want to see small ranges. So price moves up, short range. Price moves up, short range. Up, short range. Up, short range. Till eventually we get to the wave 4s. And that is where we can then expect bigger ranges again. So that is the difference. Wave 5, we look for an ending structure, deep retracement, big range. While if we look for wave 3, increase in volume, short ranges, strong impulsivity to the upside. So both of these scenarios are looking for all-time highs. And it's only what happens after the all-time high that really decreases probabilities for both of these scenarios. But being conservative is a lot better, in my opinion, than being way too bullish. Now I'm a trader that I do a lot of with my trade management. So in my case, if price takes the high, I just observe, right? I just observe what happens. And then based on the new range, I know the probabilities, because the ranges always give you everything you need to know in Elliott waves. The trades are generally made in the range, right? From an Elliott wave point of view. So cool. So these are your two bullish scenarios. Right, the bulls have a higher probability compared to the bears. Your invalidation for this scenario, by the way, is 24.9K. Upside remains the higher probability scenario compared to a bearish alternative, which is what you see here. So we then have a 3-wave structure in A or W, 3-wave structure in B or X, and then you look for either a wave Y or C. Doesn't really matter. Your minimum target would be 30K on log. This is currently the log scale, as you can see here, the blue L. We are in a weekly time frame. Price moved up 300%, went down 70%. Makes a lot more sense to analyze this on log, which is preferred on this time frame, and therefore log targets are important, more important than the linear. So log target for Y would be 30K, for C would be below 15. Linear target for Y would be 43.2, but it's less relevant because it's a linear target, so not log. So then it's this, right? So yeah, but this has a lower probability, and preferably your Y or C finishes after the 302, which is the 27th of April 2026. Cool. Then we go to the daily time frame. So to summarize the weekly, probabilities are higher for the bulls. And then once price takes out the all-time high, we just continue following the price action, and we will know exactly what the probabilities are for continuation in a multi-1-2, or we're looking for a wave 5 and the start of a bear market somewhere in 2025. No? That being said, on the daily time frame, there's a couple of bullish scenarios that I'd like to show you. Now, in the silver updates, if you are a silver member, you'll know that I spoke about both of these diagonals in a bit more detail than I did yesterday, plus the double 1-2 scenario. I'll show this in a second. I didn't show them in a morning update because of the time of the video, right? I want to have around 10 minutes, but also I preferably show one bullish and one bearish scenario. Makes it easy for everyone to follow. But in a live stream where I can engage more, talk more, explain more, answer questions, I do like to show you these three. But the conclusion is the same, right? So it's the confluence between the scenarios. Then I also have two more bearish scenarios, and then we zoom into the lower time frame and the probabilities here, okay? So, starting with what I did show in the morning update. This is a double 1-2. Now, the reason this double 1-2, by the way, doesn't start here is because this can be a triple 1-2, where you have a finished A, B, C, diagonal in A, B, sharp C, finished, end of wave 4, 1, 2, 1, 2, 1, 2, up. Possible. Alternatively, you have your W, X, and then a triangle in Y, and you have 1, 2, 1, 2 up. The thing is, it doesn't matter, because in both cases, you have at least a double 1, 2. So therefore, I prefer to look at this over here. So from the low at 52, we have the move to the upside, and your most bullish scenario would be a double 1, 2. Now in this case here, we then have, I actually want to remove my dotted line here. Okay, nice. So in this particular scenario, we then have our wave 1, 2, 1, 2, look for price to move towards the upside. Wave 2 can be any corrective structure except a triangle. So it can be zigzags, it can be a flat structure as well, right? Where you take out the high, hit resistance, move down. 70.9K, very important resistance. I'll explain why in a second. But by all means, you want your wave 2 to end up between the 05786 Fibonacci, 64.2, 61.1, and preferably after the 382 Fib time, which is the 25th of October. We have hit the 382 over here, but the 382 is a uncommon target for a wave 2, plus this low here was made before the 0.382 Fib time. Comparing, by the way, I talk too quick, too technical sometimes, but the Fib time, this vertical line, right, is taken with this tool, trend-based Fib time. First click, second click, third click. Right? You're comparing wave 1 with your wave 2 in time. And it is by far most common for a wave 2 to end at least after the 0.382 Fib time. So that's what you're going to be looking for. So the fact that price hit the 382 horizontal here, which is an uncommon target for 2, plus this low is made before the 382 Fib time, lowers the probabilities that it is the end of a wave 2. So therefore, probabilities are higher. You're going to be looking for a bigger corrective structure in your wave 2, right? And again, wave 2s can be many structures: zigzags, double zigzags, WXYs, flat. Depends on the lower time frame, which we'll check in a second. Okay. So in this particular scenario, in other words, you preferably look for downside first. Common target for your 2 is the blue box, and at least bare minimum a longer sideways corrective structure to end after the 382 Fib time. And then you move up. Invalidation is 58.8. Now this price action that I just explained is very similar to the two scenarios I'll show you now. So even though this might start to look complex, the confluence between these three, the double 1, 2, and the two diagonals I'll show you now, right? The confluence is the price action that you are looking for. And you only know which scenario eventually plays out once you then take the high. Right? And then again, you're going to be following up. We're going to keep an eye on what price does at resistance. No? But the conclusion is the same. So here, and I do have some things to add. You might also see I changed some stuff compared to yesterday. But here we have a leading diagonal. This is the first of two, right? So here we then have our wave 1, 3-wave structure, 2, 3, 4, and we look for 5. As you can see, in this case, we have a finished 3, finished a 4, which means now we're looking for a 5. 5 has to then be a 3-wave structure ABC, because we have 3 waves in 1, 2, 3, 4, and we need a 3-wave structure in our wave 5. However, the invalidation for 5 is 72.8K. Trend-based Fib extension, this one here, taken from the start to the end of 3 to the end of 4. Wave 5 is not allowed to be longer than wave 3 in price. So this is a very hard invalidation for this scenario. Now the issue for this scenario is that if we want wave 5 in blue to be a 3-wave structure, right? As currently locally this counts best as an impulse, so that's why we would then look for a bigger 3-wave structure. You need a very deep wave B, A, B, C. So wave 5 should be a zigzag family structure. In this case, we look for a simple zigzag 5, 3, 5, A, B, C. But the common target for a wave C is between the 1 that I have here on my chart and the 1.236 over here. Now, if price retraces to the 786, you can see that the 1 to 1 in white is just below the invalidation. If price would retrace to 62.2k, your actually minimum target for C is at the exact same level as your invalidation, right? So basically what we're looking for is B retracing to 61.1k. If it does not and it continues up, then you can basically put this scenario like in the bin, because it's very rare for wave C's to actually not hit the common target. Doesn't happen often, but it does happen. But it doesn't happen often. This was a perfect, this was a perfect target hit here in wave 3. Wave 4 was short. This one was short. This one was also good. And also over here. But nonetheless, this is your invalidation. So that's your most important level. Plus, of course, 58.8. You don't want to see it hit. But in this case, you would also be looking for a deeper retracement, also longer in time. Wave B can be any corrective structure, including triangles, and then you look for a wave C up. But if this turns out in like a triangle, you have a problem, because likely your C is going to hit 72.8. So you definitely want to see a deeper corrective structure. But the price action is the same as the double 1, 2 on the short, like short time frame. And then finally here, the second diagonal, 1, 2, 3, 4, 5. So here we have, and this is a slight like difference. So instead of 3 being here, it moved to the right, right? And then we have our 4 that we're waiting for. So then again, we're looking for a bigger corrective structure and in price to move to the upside to take the high. Now you see the pattern. It's all the same. It's just that we have different rules and technicals that are important. So here we have a wave 3 that is longer. Look at the orange 1-to-1 here, trend-based fib extension. Then wave 1, taken from the low to the high of 1 to the low of 2, comparing wave 1 in price with wave 3 in price. And your wave 3 is longer than your wave 1. Now it's not an invalidation, but it does impact probabilities as it is not preferred. No. However, inside 3, we of course then need to look for a 3-wave structure, being A, B, C. And if this is a wave A, wave B, and a wave C, then your wave C here only hit the rare target for C, because your common C target is here, which we clearly did not touch. Right? Your common C target is between 72.8 and 76.3k. So your wave C is short in wave 3. Now, by all means, we didn't look for 4 and 5. We get to the probability soon. Invalidation for this scenario, by the way, is taking out the low at 49. But also here, the price action is the same. You preferably look for a bigger corrective structure, and then price moves up and takes out the high. Exactly the same in this scenario, exactly the same in this scenario. Okay. Then we move to your most bearish scenario, which has, or not your most bearish but then bullish scenario. Doesn't have the greatest probabilities though, because of local price action. The bulls have a higher probability on the daily compared to the bears. But what you're looking for here is a flat A, B, C or A, B, C. Doesn't really matter. In both cases, you look for an impulsive move to the downside. From the high, you want to see impulsive structures. Minimum target 58.8 and your furthest target would be 52. But yeah, you need impulsive structures to the downside, which at the moment is a little bit challenging. As the probabilities are higher, this is corrective, but we'll get there. Right? And then finally, most bearish is a diagonal expanding in wave 1 or A. This is your 2B, and now you go to much lower prices. Low probabilities, the lowest out of all, for 2 reasons. First, wave 1 or A is an expanding diagonal, which is very rare, never preferred, unless every other scenario fails, which it hasn't. And 2, this then has to be, if we want to somehow finish wave Y, you know, a double zigzag, A, B, C, and W, correction, another A, B, C, and Y. In this case, we then have a double zigzag with X hitting the 0.7 and the 0.7 for a wave X in a double zigzag significantly lowers probabilities for it to be a double zigzag. So yeah, not great. And if you hit the 886 at 71, probabilities go down even more. So yeah, the bulls have a higher probability compared to the bears. If we then zoom into the lower time frame, and then we summarize everything at the end, and then we go chatting and Q&A. Halloween effect. I should do something for Halloween. I don't have any suits or whatever. Locally on the 1 hour, we have this move to the downside here. Now remember that actually in both of the bearish scenarios that I've just shown, so the flat where we have our wave B and we look for C down, right? Minimum target 58, remember? Lowest target would be 52. Or the most bearish scenario with the expanding diagonal on the daily. In both cases, from this high, you need an impulsive move to the downside. And there is only 3 impulsive structures that you need to keep in mind. The first one is, of course, a normal impulse, 1, 2, 3, 4, 5. The second one is a diagonal, 1, 2, 3, 4, 5, correction, continuation. And then a double or multi 1, 2. 1, 2, 1, 2, and then boom. And then you eventually get 3 and then 4, 5, 4, 5, right? Now, if you compare these structures here with what we have to the downside, then you can see that this looks very 3-wavy, not 5. So an impulse to the downside here, where this has to be some sort of a wave 4. If this is, all of this is a wave 4, then what is your 2? We can't count 1, 2, 3, 4, 5, right? 4 is very long compared to very short wave 2 in time as well, right? Like it's over 6 times longer. Wave 4 would be over 6 times longer than wave 2. It's not really worth looking at. So the probabilities are not great for this one, right? An impulse. So then we have a diagonal. Now, if this is a diagonal, we are then looking for 1, 2, 3, 4, 5, a bigger diagonal. But it's too early. It doesn't make sense to give the highest probabilities to diagonals that have not even finished or are not even working on a wave 4. So, not relevant. And then, let me do this here. And then we have a multi 1, 2, where we then would need 1, 2, 1, 2, impulse down. However, locally, we hit the 886, taken from the correction to the move down. And the 886 is very rare for a wave 2. In this case, it would be the second 2, right? It would be this bump here. The 886, very rare target for a wave 2, which also significantly reduces the probabilities for this scenario. In other words, the probabilities are higher that this structure down is corrective and not impulsive. You don't even have to know what the exact structure is. You don't need to try and count this in a lot of detail. You can, if you want to, of course, right? It's good practice, can be fun as well, puzzling, but you don't actually really need to know. What you do have to know is probabilities are higher that this is corrective, which automatically increases probabilities to take out this high. Unrelated to, is this an ABC? Yes, there is the potential for this to be impulse, correction, impulse, and then A, B, C. An ABC can be part of many different structures. You can have a double zigzag, a WXY. You can still have a bigger flat. Remember, we are preferably still looking for a bigger corrective structure on the daily as well, right? Now, a zigzag can be part of a flat, can be part of a WXY double zigzag. You can even have a sideways corrective structure, WXY. You can even still have a triangle, but then we don't count in the wave 2. So there's many options that you have when you count an ABC here, which definitely can be an option. In this case, sharp move down, sideways structure, another sharp move down. This move down can be counted as a impulse to the downside with a double 1, 2 locally. But by all means, the probabilities are higher. This is corrective. And therefore, the probabilities are higher to still take out this high, which therefore gives you a bullish bias. So even if price continues to correct in a bigger corrective structure. Of course, shorts can be interesting and all of that stuff, but the bias from an Elliott wave point of view is towards the upside, and any direction can be traded, both down and up. But of course, it is interesting to keep an eye on the high. So on the day, so let me summarize. On the weekly time frame, the probabilities are higher for the bulls. On the daily time frame, probabilities also higher for bullish scenarios compared to the bearish scenarios. And locally here, probabilities are higher that this is corrective and you still take out this high. By the way, I have to add that on the daily time frame, the probabilities, yes, are higher for the bulls, right? But you preferably first see a bigger corrective structure. I actually think I wrote that in the probabilities this morning. So what I wrote here, so in the morning update, I only showed the multi-one too, but here I also showed the diagonals. But we preferably see a bigger corrective structure, right? From a time perspective, it would be nice to have a bigger corrective structure and a deeper move down. Also, actually, from a price perspective, get a deeper retracement. So, generally, probabilities on the daily are higher for the bulls. However, preferably see a bigger corrective structure. So, yeah, that's basically it. Weekly remains higher probabilities for the bulls, on the daily as well at the moment. And on the 1 hour time frame, probabilities are higher. This is corrective, which opens the door for bigger corrective structures as well, but then eventually take out that high, which is then something I'll be looking for. Now, with regards to support and resistance areas, to the downside, there's two areas of support that I keep an eye on, where price bounced at the moment. Actually, for me, is not, it's actually not like interesting. So not involved with this move to the upside here. But we have a gap below us. This is a daily gap, daily time frame 64.8 to 63.2K. Generally, you expect the start or the high in this case of the gap to act as support. If you do close a candle below 64778 on my Coinbase chart, the probabilities increase to fill this gap. And if you do get close to this support area, which for me is actually more interesting. So that is 62.2 to 61.7. Okay, and to the upside, we have a couple of things. So first of all, the most interesting resistance would be 70.9K. We have a monthly and a weekly naked point of control, which translated means a lot of volume has been traded here in the past. So a lot of people on this world have traded 70.9K, or at least around that area. So therefore, it is a naked, or it's a point of control, meaning a high volume traded area, but it's naked, which makes it even more interesting. If you want me to explain this in more detail, then just ask. But 70.9K, main resistance above us. If I open all of the stuff, then you can see this one is not interesting. We hit the daily naked point of control, so I can remove it. To the downside, in the local range, daily naked point of control, 66325. Daily, 6.9. This one it's not too interesting for me, actually, this daily, gotta say. Then we have what I just spoke about, 70.9. And then to the downside here, right, you can see this is quite empty. We only have the gap here. And then we get to some support levels. Again, a weekly naked point of control here as well. So it's quite interesting. So these are the levels I keep an eye on. To the downside, I preferably look at least for the gap, if not a little bit lower, or the block plus what we have here. And to the upside, 70.9K is interesting. And then up. So in my folders with volume levels and time frame horizontals, you don't really have anything going on except for the daily all the way here. But to the upside, we had this point of control. So you can, of course, we see the drop. So you can basically create a range here. And I did the range here. Doesn't really matter. Point of control is similar, but bit of resistance. Next point of control, 684, which is the point of control of this range here. Levels of interest. Okay. Anything to add? Yes, I guess we can talk about the local structure here. Now, in the morning update, I said that I'm mainly interested in CVD divergences on the right side of this recent high. We had some bullish, after filling this gap basically here, we had bullish CVDs, price moved up, took out the high, very nice. Your most bullish scenario here is 1, 2, 1, 2 up. However, actually what looks better is a corrective structure, can't deny. So if we count this as a 1, 2, 1, 2, then your second 1 and 2, your 2 is incredibly big compared to your 1 here. So if we take this, then your 2 is over 6 times longer than your wave 1. Right? Not if you take wave 1 from the low here, but it doesn't make sense to do that. If you would count 1, 2, 3, then where is 4, where is 5? We never had 4 and 5. So it makes more sense to count this as your second 1. And then you have 1, 2, 1, 2, but your 2 is so big. So it actually looks better as a zigzag to the upside, being an ABC, which in this case would then be counted as look for a W, look for an X, and then, oopsie daisy, look for a Y. Like a double zigzag or a sideways double combo, yet to be seen. But it looks better as a corrective structure, which is also what we want to see actually for the daily to increase probabilities to continue the range, right? So yeah, and I know the levels to the upside that I'm looking at, just to see if we get any sort of resistance. At the moment, price is moving up, volume is increasing. Wait for a new range to form, gives all the clarity that we need. Okay, so summary again, weekly time frame. I'll just quickly show. Wow, that's a lot of lines. Weekly time frame. Scenario number 1. Primary. With the alternative being the double 1, 2, lowest probability is your bearish scenario. On the daily time frame, your 3 bullish scenarios have the same short time frame price action pretty much. So you have the double 1, 2, preferably you look for a longer corrective structure here, also preferably more downside. And then you move up and take out the high at 69.5. Same is true for the diagonal. Preferably a bigger corrective structure than take out the high, as well as in this scenario, exactly the same. So bullish scenarios on the daily have a higher probability compared to the bearish scenarios, which is an impulsive move to the downside in C. The problem is counting this as an impulse has lower probabilities compared to counting this as a corrective structure, which lowers the probabilities for this scenario. And also for this scenario, expanding diagonal, first of all, very rare, and a double zigzag in 2B with X hitting the 07, lowest probabilities, plus not really a nice impulsive structure to the downside. So the bullish scenarios have a higher probability on the daily and the weekly, and locally on the 1 hour time frame, the probabilities are higher that this is a 3-wave corrective structure to the downside, increasing the probabilities to take out this high, as the probabilities are lower that this is an impulsive structure, right? Either an impulse, traditional 1, 2, 3, 4, 5, a diagonal, being a leading diagonal, too early, or a multi 1, 2, which is almost fully invalidated, but already low probabilities. Yeah, there we go. Why is it naked? Okay, let me explain. Wait, let me first put this on. Elliott wave analysis at, I think we started like 60 minutes. Let me quickly explain. Up, and then do this, pin the message. Okay, so let me go to a daily time frame here and open the daily naked point of controls, which explains all the other, also the weekly naked point of control and a monthly naked point of control. So for example, the most recent daily naked point of control is 66.3K, right? Now this is a so-called naked point of control. Reason is that this day first has to close, right? Once this day is closed, you need to check what was the highest volume level of this day, right? 66.3K was the area of this day where the most volume was traded. So that is the point of control of this day. So the point of control of the 23rd of October, right, was 66.3K. The reason it is naked is because after the day has been closed, this one here, right, we haven't touched this level yet. Price did not come down to touch the daily naked point of control or the point of control of the previous day, meaning it's still naked. Only when price hits it is it touched, and then we can remove it from the chart. But as long as it doesn't, it is regarded as an area of support. Same is true, for example, here, right? Candle makes the high, 72K, and comes down. This day, highest amount of volume was traded at 70.9K. Now you can see that at no moment in time afterwards did we move back to the point of control of the 7th of June. So therefore it's still naked. So the reason we call it naked is because the point of control of that day, the highest volume that has been traded on that day at that level, has not been touched afterwards. Now, not every day gives you a daily naked point of control, right? So I remember this day here, 12th of October, the point of control of this day, right? The moment I wake up, I'm behind my chart and I check what's up. This candle here already touched the point of control of the previous day. So therefore, I don't put any daily naked point of control on my chart because there's no, this day didn't give me any naked point of controls, right? Sometimes the day closes at the point of control and the next day opens at the point of control. So you don't have a daily naked point of control. So not every day will give you a daily naked point of control, but if one does, it's an interesting area of support or resistance. And you can do the same on the weekly as well as on a monthly time frame and even the yearly as well, a yearly naked point of control. So yeah, there you go. Let me have a look here. Where were we? We were somewhere here. Marcy 33, welcome. 33, is that a reference to Formula One? Asking. Zed, welcome. The pitchfork is better than the channels because we know the 0, 1, and 2 and not sure about 3 or 4. But that's why you have the trend channel. So you're sure about 1 and 2. So that's the base channel. And the moment you break out, right, and then price continues. So look, because it's of course the same with any tool of analysis. The channels work very nicely. So if you have your wave 1 and your wave 2, you can pull a base channel. And then what you're going to be waiting for is price to break out. Okay. And then we're going to look for the trend channel. Let me just, right. And then as price moves up, right, we just have to wait for price to eventually break the channel. So over here, right, we had a bit of a range. Didn't break the lower trend line. Cool. We continue moving it up. Didn't break the lower trend line. Continue moving up. And then we start a big range. And oh, we break the trend line. Cool. Probabilities are now highest. This is your 4. Which therefore means we can remove the trend channel. And then we start looking for the end channel. Which means we have to wait for the end of wave 4. And then we take a channel from low of 2, end of 4, end of 2, end of 4, end of 3, and then the upper half segment preferably. And of course, with the pitchfork, you're going to be looking for the end of 1, end of 2, and then you use the pitchfork. And then the median line should be touched in 3. But it's the same as waiting for the base channel to break and then follow up with a trend channel to wait for a wave 4 to be more confirmed as well. Yeah, I guess it's more about what tool you prefer. Everything works in the hands of the person that educated him or herself with that tool. So I prefer channels compared to pitchforks, but that's of course my preference. Many people might do it otherwise. I also prefer CVD divergences over using RSI, for example. And I haven't seen anyone else really using CVD in confluence with Elliott waves all the time. Most of the people use RSI. They use MACD, more of the traditional tools, which is perfectly fine, but it's not tools that I like to use. So, yeah, you can use pitchforks, I'm sure. The channels work for me, though. No. Is it possible? Wave 4 is not over yet. Flat ABC, wave currently working on wave B. A flat, yes, but then call you're still going to be looking for price to take out all-time high in this case. And that's, of course, what we're then looking for anyway, also in the bullish scenario. So the moment price takes out the all-time high, your bearish scenario is a flat. Your bullish scenario is continuation. It's the only scenario for the bears at that moment in time. And for a flat, price has to retrace to at least 90% of wave A. So if wave A is all-time high to 49, 90% is 71.3. However, your most common target for a flat is actually higher, which is 81.3 to 86.2K. And then you would be looking for correction. This, of course, B should be a 3-wave structure, and then a wave C to move below. I mean, that would kill many portfolios. It would be nice, though. So yeah. So what you say is correct. It's still on the cards. Like a flat is absolutely possible. A flat is also a common structure in a wave 4. But you would need to take preferably all-time high. That's most common for flats. Yeah. Power Meet, welcome. Corona. Yeah. Corona. We've had almost exactly, and then flash crash. I mean, price can rhyme. Generally, of course, doesn't repeat. I personally prefer to look at the local price action. Because it's always different. Sometimes people compare past price action with current. I'm not really someone that does that a lot of the times. I mean, if I look at this range here, it's completely different from an Elliott wave point of view. It's such a different structure that at the moment you can just wait. Observe this, right? 1 second here. I don't have it in my favorites, but let me do this and then, okay, let me include this and then this, up. Whoa, okay. So, basically what I'm trying to show is that the price action you have now here, right, is very sideways, very, very sideways. This move down was a lot deeper, right? You have move down, range, down, range, down, range. While here we have much more a sideways price action. Of course, we had moves to the upside, but the retracements are much higher. It's much more of a sideways price action. For me, it's not like the probabilities here, right, were actually higher to still move down. Once more, do you know that COVID is coming? Did you know that the candle is going to be this quick and this far? And no, but the probabilities were higher to take out the low. And we stopped exactly at the golden pocket as well, which was brilliant. Golden pocket, common target for a wave 2, 786 touched, 886 avoided, and up we went. Yeah. People call it the Black Swan event. I call it a wave 2. And that was the beginning of the big bull market. Perfect. Bearish news right on top of the beginning of a big wave 3. So for me, this structure here is very different. I don't really like to compare previous price action much with current price action. I prefer to focus on what's happening now, as that gives me the information I need to make decisions with the current market. 120k is also an Elliott wave target. How you doing, TP? Welcome. I replied to your comment this morning, by the way. Ali, welcome. 2017, people were also talking about 200, 300k. Yeah. Make it make sense, please. Halloween effect. Yeah. End of October, November, we're always bullish for the crypto market. I'm waiting for that one time where it's not the case. I think people also said Rectember, no? I don't really use that stuff in my analysis, but wait. Wasn't it like October bull and then September was super bearish or something? Here's your Rectember. Wasn't that a thing? I don't know, like I think I heard it during September when price moved down and then we came back up and then, yeah. But it can be used again. It can be used in your analysis if you build statistics. So it would be good to know, okay, in all of the previous years that Bitcoin is here, how often has Bitcoin moved up or down in a month? And you can even be more specific, right? Like in the first 2 weeks of the month, what did it do on average? And what did it do in the last 2 weeks of the month? And yeah, you could use it for your trading. 12-month member. Jeez. What's up, Flotty? Nice to have you here. Beautiful blue badge. Yeah. Insane. There's a very few people with the blue badge. It's insane to see the blue badge popping in sometimes. So thanks, Flotty, for the support, and nice to have you here, man. Insane. 12 months. I think we started with Discord and then eventually memberships July, August last year. The channel is now live for 1 year and 8 months. Yes, yeah, that would be the most bearish scenario, but then your first structure in A would be a diagonal probably. No? Head and shoulders, that takes price to 64.2. Head and shoulders, 64.2. Are you talking here? Shoulder, head, shoulder. I'm not sure which head and shoulders. The local one would be 64.2, I suppose. So shoulder, head, shoulder. But yeah, I don't use those types of analysis, those type of patterns. So yeah, you could use it. I mean, 64.2 is the gap as well. Right, 64.2. Yeah, that's inside the gap. So preferably you then move down to 63.2. But yeah, you can find support in that gap and then move up. I explained the naked one. For a short, stick to your plan. Know your areas of resistance and your entry requirements. Can you please help with the volume profile settings? Yes. So I have these basic... wait, let me first explain this. So here you can see row size, value area volume. Right? This is standard. And then my row size here is 148, but I have a couple of row sizes. Now, most of the time you're good with 148. I like to use 300 as well, 500 when I really do bigger ranges, and then 1,000, like 5,000 would be a full chart, like a, like if I go to Bitcoin and I like the big index chart, and from the early stages of Bitcoin to where we are now, I might use 5,000, because 5,000, it's the amount of rows. So in the volume profile, you can see there's bars, right? So currently, I have 148 bars here. But of course, if your vertical price action is a lot, you want to have more bars. So then I might go to 1,000 or 5K, but generally it's not used. Glenn, welcome, and nice to hear. Teaching is one of the goals of the channel as well. It's actually, we are thinking about stuff for next year with regards to teaching people more about Elliott waves. So we have a big Elliott wave PDF that is coming up with all of the information really that you need. Very detailed. Really, really high quality. So I look forward to launching that one. But also other stuff like other training content I have some ideas for next year. So all focused on teaching. As that when I started the channel, two things were very important: provide people with an update, and second, educate, because Elliott waves can be very complex, and I like to teach people a thing or two if they are open to learning. So yeah, happy to hear that you are learning here. Can B in a wave 2 or 4 overlap? Can a B in a wave 2 or 4 overlap? Well, wave B, so there's two things going on. So if you have an impulse, 1, 2, 3, 4, 5, your wave 4 is not allowed to overlap with your wave 2. Right? There's no overlap allowed here. Unrelated to what wave 4 is. You can't overlap wave 2 and 4 in an impulse, only in a diagonal, but not in an impulse. Now wave B, right, inside, for example, this corrective structure, right, you might find a zigzag, A, B, C, right? And then your wave B can move up to the wave 2 of A. That's no problem. Yeah, so a wave B can overlap with a 4 or with a 2, but in a zigzag, wave B is not allowed to take the origin of A, and in a flat, wave B is not allowed to go, or it's not a hard invalidation, but preferably doesn't touch the 1.618 Fibonacci, taken from the start to the end of A. I hope that answers the question. And then there was a second part. Discord. So we do have a protection on Discord against scammers. Your account needs to be older than 1 day. But there's 2 links in the description. And the first link in the description should get you to the Good to Know channel in Discord. I might actually have to check this after the live stream. But if you scroll down a bit further, you will see the Discord, the bit.ly Discord link, which is one that you can use as well, because Discord is open to everyone. It's public, so yeah, the link should work. So I might have to look at the first link, but it should work. People join every day, but I have a look at it after the stream. Does price get drawn towards NPOX after it's being pulled? It's a volume level, so it's always an area of interest. Market looking for volume. What time frame is best for scalping using CVD? 3 minutes scalping, 3, 5, 15, but 3 and 5 probably. Yeah, I think it's worth saying that price currently at the resistance of the wave 4 channel. More resistance. Pretty funny. Also target for wave C in a bigger flat is 40k. Yeah, would be interesting for sure. Yo, Samith, welcome here. The second one. Yo, Flotty and Samith, both with the blue badge. Cheers, guys. Welcome, Samith. Yeah, it is, my friend, it is wave C of a wave 2. So, I mentioned wave 2 because it's a 2 and then you start your 3 up. But inside your 2, you then have your zigzag family structure. Bombachito, welcome. Yes, that is correct. Yeah, karting. Yeah, I mean, it was before I went to South Africa. Yeah, so this is the PDFs of Mr. Swennell, yes. It's very interesting data. And I guess, yeah, I mean, for me it does, yes. So you want to look at the statistics where he compares, or he collects the data for 2 industries. I think it was commodities and stocks. But you want to use the data from the first tables, which I think was the stocks for crypto. 1 second. Let's check here. Let me I'm just downloading it again. There's a lot happening. Let's see if I think this is, I need the other one. Oh yeah, rule of alternation. But this is not, no, I need the other one. Okay, 1 second. Wait, is this the 1 second here? I'm messing things up here. PDF. Ah, there we go. Found it. Yeah, so the stocks. You have commodities and you have stocks tables. You want to compare with the stocks. So that's where you get your data from. This is all just in-depth information, but then here, ending diagonal, internal wave structure, stocks rising, stocks falling. So yeah, you want to compare with the stocks, yeah. Colin, the divergence lines on the CVD, make sure to check the first Discord in the link in the description. So if you see below in the description, there is a Discord logo. And if you click there, you go to a channel in Discord where you can find information for the line CVD with lines. So it's in Discord. Pleasure, Yatin. What's up, Reloads? Would we hit 70k before dumping? What is dumping? Of course, at the moment probabilities are yes higher that the local move down is corrective, and therefore probabilities are higher to still take out the high at 69.5. Yes, even though when looking at this structure up here, it does have a bit of a 3-wave zigzaggy structure to it, and then a correction, and then possibly another zigzag. So I'm not yet convinced this is impulsive. So I explained it in the analysis as well, but this feels corrective. it's nicely moving to the upside. We know the level of resistance as explained in the analysis, but probabilities are higher to at a later stage still take out the high. Yeah, absolutely, Carl. Yeah, for sure. I mean, that's Elliott waves. You can go into the rabbit hole, right? Like there's so much information. So much information. If we have a corrective move down, probabilities are high to take the high. On the high time frame, would be better to have the exact time frame, because high time frame for some people can be 1 hour for scalpers, but for others it can be the monthly or the yearly. But in my story, what I explained is on the daily time frame, right? The probabilities are higher for the bulls. We're looking for a corrective structure, but on the 1 hour time frame here, this is where I explained that this has a higher probability of being a corrective structure down, increasing probabilities to at a later stage take out the high. So that's your bias, right? However, on the daily, preferably you have a bigger corrective structure and not the end. This preferably is not the end of your corrective structure. You're preferably looking for a bigger move, right? And we have some supports to the downside still, which are interesting. So therefore, I would prefer seeing a continuation of this range or a move down. Move down would be nice from an Elliott wave point of view to get a bigger corrective structure, and then after take out the high. Now tomorrow we have some news on Friday. The weekend is coming up, generally a ranging structure, so let's see where we are by that time. Akarya Suman, welcome. I'm just a newbie. What do you suggest for the mastery of Elliott wave, and is it okay if I take trade as I'm learning, or should I complete it first? You can absolutely trade while learning, but use a low portfolio size, because as long as you don't master Elliott waves, it of course doesn't really make a lot of sense to trade with a big portfolio size, right? You want to save your money, protect your money, I suppose, risk management. Now, with regards to your learning approach, I recommend to do two things. One is if you click on the description and you unfold the description, you scroll down to Elliott Wave Education. It's a title. I have a couple of links there, including a link that has a laptop emoji in front of it. And I forgot what I wrote, but it's Elliott Wave website or something like that. Check that one out. That would be step one, which is this website. Let me get it for you on my stream here, so you know what I'm talking about. So this website, right? It's a bit.ly link in the description, but this is a great website. So start with this. Just read it from the very beginning. Right, read it once all the way down, and then make notes. I really recommend to make notes not on a computer but with pen and paper, and also draw the structures and really study it like you're at university. So this would be step one, and then your second step would be to go to my YouTube channel and check out this playlist. So the Elliott Waves beginner guide, which it's beginner guide, but it's very short and snappy. It's actually, it goes very quick. So having a basic understanding by knowing the website would be step one, and then you can go through these videos where I cover every Elliott Wave scenario with everything you need to know. Probably for next year, I'm gonna work on stuff that is a lot simpler, because even though it's a beginner's guide, it goes very quick. It's very deep in a very short period of time. So a lot of knowledge, right? Deep diving into the theory. So even though it has everything you need to know about the structure, I can make it more beginner friendly, I suppose. So but that's something for next year. I have a whole idea with regards to education for next year. What's up, Rosie? Welcome. Welcome. 17 million liquidation at 68.1k. Almost there. Pleasure, Akaria. Pleasure. Yeah, I mean, look, I said it earlier. I'm not sure if you were here already, but when I started the channel a while ago, one of my main areas of focus is education. And the reason for this is that online, because Elliott waves is very tricky, you have people making content that have no clue about the rules. And I got very annoyed. Which was one of the reasons why I started the channel. It's to fill the gap. Make a YouTube channel that uploads frequently, respecting all the rules and the guidelines of Elliott waves to the T. Because there's many channels that don't, which frustrated me. And yeah, so part of that goal is to also educate people then, right? To make sure they also stick to rules and guidelines. Yeah, and it's nice to see people are learning, educating themselves, and yeah, hopefully use it in their trading. Yo, Doda, there's no way. First, yes, I have a beautiful day. I hope you have a great day yourself, and you are also a professional weightlifting coach. So if that's true, then we have 2 Olympic weightlifting coaches in the community, and we have 2 professional weightlifting coaches. What's up with the weightlifting stuff, yo? It's incredible. Mohib, welcome. I'm doing good. But leaving soon. A lot of stuff to do. We're online for almost 1.5 hours. So I can feel it in my throat as well. Just joking. Oh. Bitcoin is in a bunny position. That's interesting. Is it good to long or short? Well, for you, Mohammed, it's probably best to do none of these. Don't go long and don't go short, but instead work on a personal plan or strategy. Now, if people enter the stream and ask me this question, it tells me one thing. And it tells me that you do not have a plan. You don't have a trading plan. You don't have a trading strategy. You don't know what to look for. You don't know how to execute based on your plan. So what you want to do is create a plan. And there is 6 steps to create your plan, right? So I'm going to give you 6 steps, Mohammed, which I recommend you to follow. It will take time, but are you here to be a long-term, consistently profitable trader, or are you here to gamble? That's a question that you have to answer for yourself. Of course, one is profitable and the other not so much. Step 1, try as many free tools as you can on TradingView. TradingView is free, it's accessible, right? Check out all the tools on the site and also some of the indicators, right? Whatever you like to use, and build experience with them. You can find literally everything online and on YouTube. And if you don't know how to use something, you can always ask me. But step 1, build experience with the tools. Step 2 is find your favorite tools, right? And build statistics on them. I have some of my favorites here, but find your favorite tools and build statistics using Excel or whatever software maybe you want to run. And that's going to probably take most of your time in these 6 steps. It's the data collection, which is also the most boring phase. And generally, it's the phase or the step where most people quit. It's not exciting. You know, trading should actually be very boring. And collecting data is definitely boring, but it's necessary. So step 1, try as many free tools as you can. Step 2, pick your favorites, build statistics on your favorites. Step 3 is combine some of your favorite tools with good statistics, and now build statistics on the combination. Now you are working on a strategy. Step 4 is tweaking and adjusting. So add a tool to the mix, remove a tool from the mix, add more statistics, and try to improve your win rate, your risk-reward ratio, other data that you're looking at. Step 5 is start trading your now strategy based on statistics with a low portfolio size so that you can get, first of all, used to trading the strategy, but second, it also gives you time to work on your trading psychology, right? So if you go in too heavily in step 5 with too much position, it's gonna be problematic for your mental. And the mental game of trading is important. Check the book in the description, Mental Game of Trading. So step 5 is start trading with a low portfolio size and work on your trading psychology, because you can have the best plan, which can be based on great statistics, but if your mental game is shit, you're going to be a losing trader anyway. And then your last step, step 6, is slowly increase your portfolio size so that you can get used to bigger losses. Getting used to bigger wins is easy, right? Getting used to bigger losses, that's the challenge in step 6. Because it affects your psychology, which is why your psychology should be trained in step 5. If you follow these 6 steps, you have a very good probability, very good chance of being a consistently profitable trader. The question you got to ask yourself is, do I want to be a consistently profitable trader? If the answer is yes, you follow the steps. If the answer is no, you continue to gamble and ask people in live streams to long or short. Very nice. Yeah, the channel video. Yeah, it's a good one. See my question above. Make sure to just rewrite your question if I missed it by any chance. But the wave up from 59 to 69, which said it's in wave 3 is smaller than 1 and 5 unless we sharp spike. 59 to 69. $59 to 69. Where do you end your wave 3? In that case, do you count this as a 1, 2, 3, 4, and all of this is 5? Because I count it differently in that case. But let's see. Here, your wave 5. If you would, yeah, it depends where you would end your 4. So in this case, you would then have your 1, 2, 3, maybe WXY, 4, and then 5, 1, 2, 3, 4, and then 5. Of course, you have the potential of an ending diagonal, right? Up and up. So in this case, if this would be the end of your 3 is shorter than your 1. And if you do this, if you would count, right? If you would count this as your 3, and you would then have, if this is the end of your 4, like that, then your 5, did it spike? I gotta be very accurate here. Low to high to low. So the moment you wick into it, which we have done, right? 5 is longer than 3. So in that case, of course, you would need to count a flat as a lower degree, 1, 2, 3, 4, and then you look for a 5. Alternatively, 1, 2, right? 3, 4, 5, 4, 5. Mind you, I was on holiday here, but it counts best as a impulse at the moment. Alternatively, I have been looking at WXYs. So you can have A, B, C, W, flat, X, and then look for a wave Y. Right? Your wave Y needs to be an A, B, C by itself. In that case, you would need A, B, and you would need a C here. Right? So 1, 2, 1, 2, 3, 4, 5, 4, 5. That's your final leg. This needs to be a wave A, or at least by all means you need an A in here, then a B, and then you have your C. Yes. A, B, C, D, E. In that case, you would need A, B, C, D, E. Potential for triangle. And then you need another impulse, which then is your Y. So this would be WXY. This would be a bearish count. Yeah. But by all means, right, WXY to the upside would be good for a diagonal, right? Also to end a diagonal. And then you're still looking for a bigger retracement. Plus, this is still higher probability three-wave structure. So probabilities locally remain higher to still take out that high at a later stage. But as identified on the daily, we still preferably look for a bigger corrective structure. But the fact we have a three-wave move down here, right, if you would finish a diagonal at this high, 1, 2, 3, 4, if this is your 5, no. You preferably see a deep corrective structure after a diagonal. So you would need to take fibs from the low to the high. 382 minimum at 60.8K. Common target 58.3 to 52.8. Now currently the probabilities locally are higher. This is a three-wave structure to the downside. If we want to get down this far, then we preferably have a WXY locally, double zigzag. Label this as an A. Three-wave up, grab the high, this is your B. And then move down sharply, this is your C. So that you have a longer corrective structure also in time, taken from the start to, what's the high here? Here, and then put the 382 on. Oh, we have to finish, okay, 19th. So we definitely, like, my drawing is very short in time. You want to end after the 19th of November in this case. All right. Wave 3 is, of course, never allowed to be the shortest wave. Elliott, oh, you can find it in Discord, MT. Here. It is in the educational content Elliott Waves channel, these two PDFs. Channels like the base channel. Yeah, I should make a short video about it. Andrew. Hamza, welcome. Step 7, yeah. He couldn't tell you the 6 steps again. On repeat, man, on repeat. Makes me think it's a correction. Yeah, when I looked at this structure first time, I was still on holiday. But I will check it after the live stream later, because I have some other things I gotta do. But in this case, you have a range to the upside. Price action never escaped the base channel. We did hit the top of the base channel. So yeah, it's interesting. I'll have a look at it. I'll have a look at it afterwards. I need to find the time to deep dive into the chart again in more detail. Also off stream, a bit more time to think instead of also entertain. And then because I was on holiday, basically between here and of course I came back yesterday. So and here. So the price action in between, I haven't really paid too much attention to because I was gone. So I should analyze the move down, the move up in a bit more detail. But by all means, still on the 1 hour here locally, of course, this move down, higher probability three-wave structure. So that makes it simple, unrelated to the move to the upside, higher three-wave structure, increasing probabilities to take the high at a later stage, but preferably we first create a bigger corrective structure. So yeah. What price are you waiting for? Not really any price. I just wait for my plan to come into fruition with all the rules to be accepted. But levels of interest is 70.9K and 62.2K, with partly interesting being the gap, but yeah, we'll see. I'm a reactive trader, so I would need price to then hit the level and then wait for price to show me and then for price to show me strength or weakness. Yeah. I like the scenario. No, the 1-2 is not immediately invalidated the moment another idea comes up. But I'll have a look at it. But are you expecting now the moment I read it, I was like, I had to think about, I'm not expecting, I don't carry a baby, but it's a stupid joke. So what am I expecting at the moment is from an Elliott wave point of view, because I don't expect anything, I just follow Elliott waves, is on the weekly time frame bullish, daily time frame also remains higher probabilities for the bulls. On a local time frame, probabilities are higher. This is corrective, increasing probabilities to take out this high at a later stage. However, preferably, we still see a bigger corrective structure. And looking at this move to the upside so far, I don't really like it as an impulse to the upside. Can't deny. I explained already earlier that this then has to be like 1, 2, 1, 2. But your second 2 here is so long, it looks better as a zigzag. And just a corrective structure up, which would support the narrative of getting a bigger corrective structure here. So that's basically what I'm looking for. Yeah. Your deep dive from scratch on analysis is still my favorite live stream you've ever done. Cheers, maybe Ben. Yeah, that was a fun one. That was on the daily time frame. Right? That was on the daily. I guess it's very educational when you see the process, right? Not only the result, which is then the scenarios I present, but also the whole process, the whole thinking process. So that was what maybe Bandit is talking about is, I don't know, it's already a few months ago, no? Where we were analyzing mainly this part of the chart, I believe. Not even sure if it was before or after this low, but we were analyzing the daily time frame, all of the scenarios, and then get to the probabilities. Top hit on AGGR, but Coinbase, no. The top. Okay. Time for me to go, everyone. Continue with the agenda. Because, oh boy, coming back from holiday, there's always so much to do as well. So, yeah, thanks everyone for being here. What are you expecting now? Yeah, exactly. Thanks for being here, everyone. Appreciate you taking some time off your day to get into Elliott Waves here on the channel. The analysis started around 16 minutes. I'll put the timestamp in the live stream as well. And then, of course, when chatting and Q&A started, I'll put that in the live stream as well. So tonight should be another video. Let's see if we get any relevant info. I don't really have a lot of time today to deep dive into the chart. So let's see what I present tonight. I might just do a monthly or monthly weekly, or see if we get any sort of volatility locally. I might have a look locally again, but it's of course the probabilities locally are clear. So there's not too much to talk about. We'll see what we do tonight. So hope the Oracle enjoyed a holiday with you too. She did. She changed her YouTube name to Oracle now as well. Cool. Thanks everyone. I will see you at the next live stream. Tomorrow live stream starts 2:30 p.m., which is also when the news hits. So should be cool. Let's see if we get any volatility.